Morning, everybody. Nice to see familiar faces again. Welcome to today's Founders Conversation, March edition, Smart Financial Strategies. My name is Kathy Kariuki, coordinator with Founders Profit Academy, FPA in short, a community within Small Founders Association. So at FPA, we help business owners grow, scale, and thrive through our specialized coaching framework. In my role, I support our licensed training coaching programs where we provide the tools and support entrepreneurs to reach their full potential. Today, we are excited to dive into a critical topic for SMEs, which is understanding financial statements and securing business funding. Previously, during our physical founders hangout, which was held on Thursday, the 6th of March, which was graced by Mr. Joel Coril, Head of Retail and Investments, Old Mutual Investments Group, Martin Mawero, one of our SFA partner and managing partner of Nitram Advisory, and Patricia Mboro from ABSA, who is the SME cluster manager. Our conversation on that particular day centered on smart accounting, smart credit, and smart investing. So some of the takeaways we had on that particular day when it came to smart accounting, our key takeaways were smart accounting is not just about compliance, but about making data-driven decisions that drive profitability. Our speaker, Martin Mawero, emphasized that as a small business, the first ledger can be a bank account or the mobile statements. When it came to smart credit, our key takeaway was credit is a tool and not a trap. When used strategically, it fuels growth and expansion. Our speaker, Patricia Mboro, reminded the business owners that responsible lending and management of the life cycle of a loan are key in having a positive relationship with your bank. When it came to smart investing, one of our key takeaway was investing is about growing wealth wisely. Diversify, mitigate risks, and stay informed. Our speaker, Mr. Joel Coril, shared on the need to know the various asset classes in order of liquidity and understanding alternative investments that can be used to extend the life of you, the entrepreneur, and the business. Part two of our conversation took place last Thursday, where our speaker took us through budgeting basics, which is on building a financial plan for success. Some of the key takeaways were a budget is simply knowing your income and allocating expenses based on this income. It was also another takeaway was just having a financial plan that's divided into goals, short-term or long-term, planning for the future, that means planning ahead based on your business cycles and scales, monitor and make adjustments as necessary. Remember that also savings are key in helping the business scale for emergencies and also as a credit backup. And she also repeated that credit is a tool, if well understood, can be used well. So I'm thrilled to introduce to you our speaker, Eva Kithuku. Let me introduce Eva. So Eva Kithuku is a credit expert and trainer with over 20 years of experience in credit and financial planning. Her mantra is to simplify the loan process, guiding you every step of the way to achieve your financial goals and unlock new opportunities through accessing affordable credit. Eva has credit experience spanning over 17 years. This includes working in various local banks in the positions of credit manager, head of SME, and quality assurance manager. Her tasks have included lending to retail, SMEs, and corporates. In addition, Eva has experience in the fintech and portfolio management sector, lending to businesses and managing pension funds across Africa. Eva's education background includes an MBA in finance from Northwood University from Michigan, USA, and a bachelor's degree from Kenyatta University, Kenya. Without further ado, please join me in welcoming Eva Kithuku as she guides us through today's conversation on understanding financial statements and securing business funding. Karibu, Eva.
Thank you very much, Kathy. Thank you for the recap and also for that very nice introduction. And I look forward to today's conversation.
Yes, today's conversation is a bit tough, but
Yes,
interesting.
but
It's interesting. It will be interesting.
it will be interesting. It is, in fact, my favorite topic, actually.
Oh, perfect. So you'll flow.
Yes.
All right. Without further ado, we just start with the basics and overview. As we have said, the topic is on the financial statement, so we start with that. What are the key components of financial statements and how do they work together?
Thank you. Thank you very much. I think first I would like to start by demystifying when we say financial statements. You know, to most people, we start thinking it is those documents that auditors and accountants prepare. But what they prepare is numbers that represent your business. So the financial statements, I will talk of three very key ones. The first one is income statement. And an income statement, just like the name says, it really just shows the income that your business is making. So it is your total sales. And by sales, I mean if you sell goods, whatever you make from selling, or if you offer services, whatever monies you're paid for the services you offer, that becomes your sale. So it's basically your total sales, which we'll call revenue, less your expenses. And then you figure out if you're making a profit or a loss. It's as simple as that. That is the first one, the income statement. The next one is a balance sheet. A balance sheet it just shows how a snapshot of your business at a certain period in time. Like even today, if you're told to produce a balance sheet for your business, it simply shows what you own, the amount of money you owe people, and the amount of money you, the owner of the business, have invested in your business. So it's basically what you own, which in this statement we call them assets, and what you owe other people, which we call liabilities, and what you have invested in the business, which we call equity or capital. So nothing complicated there also. And finally, the last statement is a cash flow statement. And that one is exactly as the name says. It just shows the movement of cash in your business. So you did make this money. How did you use it in your business? I hope that is clear and demystifies the big word financial statements. That's all it is.
It does. As we go along, I will use I want it to be put an example of a business, like the way the second-hand clothes.
Yes.
I will probably will use the example of the second-hand clothes to bridge it further. Because
Okay.
remember, speaking to the smaller SMEs, you're just starting. But also like the way you have demystified, especially like the balance sheet, it is very direct. Probably you'll expound further on, especially when it comes to the cash flow, when it comes to some examples of the small businesses.
Okay.
Yeah.
So as you have said, if I can use the business you've given me as an example, for
Yeah.
someone who is selling secondhand clothes.
Yeah.
So let's start with the income statement. In some quarters, they will call it a profit and loss statement. Same thing.
Mhm.
And basically, for such a person, for their revenue, we will prepare these statements for a month for the sake of this conversation. So,
Mhm.
a profit and loss statement or an income statement is prepared at the end of a period. And that's why you will always see it always says income statement for the period ending, and that's where we talk of a financial year. For for ease of doing business, most of these documents are prepared at the end of a year. But you, as the business owner, you should prepare one every month because you need to know how your business is doing. And these are what is available to you. So, using our business for a person selling secondhand clothes, when it comes to their income statement, up there they have revenue or sales, if you want to call them. And
Mhm.
this is all the money they will have made of the clothes they sold that month. So maybe on first they sold 10,000. On
Mhm.
second they sold 5,000. On third, like that until the 30th. So on 30th they will add up all those sales and it will give us a figure, and let's work with 100,000. So that
Mhm.
makes their revenue. Then after that we come to what we call expenses or expenditure. And these are any costs they incurred in that month for this business. So, for instance, maybe wherever this person sells their secondhand clothes, they probably pay a monthly fee. So, maybe like a
Mhm.
license or something. So, they will say their licenses for the month 10,000. Then they
Mhm.
probably advertise their
Mhm.
clothes on the internet. Maybe they have an Instagram account, they've probably boosted it. So, they will put that cost there like marketing, they'll put it as marketing, another 10,000. Of course, this person uses transport to move from their home to where their stall is, which is associated to the business. So they'll put transport cost, another 10,000. They've probably employed a person who helps them sell or maybe who guards the store at night. That will be
Mhm.
a salary. They'll put another 10,000. There'll be another expense probably in the course of the month. She needed to go somewhere and do some photocopy or something to do with the business. So again, we'll call that administrative cost. So then we add all those costs. And now remember our revenue was 100,000. Now
Yeah.
we've added all our costs and let's say they come to about 70,000. So
Yeah.
if we less revenue, less expenditure, then we have 30,000 net, and that forms our profit. It's as
Mhm.
simple as that. I remember when we used to work in the banks, we used to say, when I used to work in the bank, we used to say for a small business, you don't even require them to have those documents prepared by the auditors and them incurring all those costs. You just
Yeah.
ask for their black book. And the black book, most business people have a black book which they fill every day. And they start today. Today is 20th March. So you start, I have sold, you write all your sales, and then you write all your expenses. And that is your income statement for the day.
Thank you. Thank you. I like the way you put out that example.
Yeah.
So, probably, how do financial statements probably differ from the other types of business reports?
Yes, thank you. And let me even just go back once again and explain a balance sheet. I forgot to explain that while using
Mhm.
the same example of the business. So, a
Yes.
balance sheet, as I say, it's a snapshot of your business at a given point. So, today, someone can ask you, Kathy, please show me the snapshot of your business as of today. And that's why you'll also see a balance sheet always says as at, and then it gives a date. It's never for the period ending because that stays in your business forever. So it's as
Okay,
at. And
as
the
at
balance sheet,
important.
yes. And the balance sheet also very simple. Using the same business, you list
Oh,
all the assets you own. So for someone who is selling second-hand clothes, they
the money.
probably own a storage place where they keep
Yeah.
those clothes. Maybe they've had a Juakali person make a Mabati thing where they put their stock at the end of the day. So that's an
Yeah.
asset because it will last. It's not going to get destroyed tomorrow.
Yeah.
They also probably own a pickup that they use to go and ferry those bales from wherever they buy them from to bring them to their stall.
Mhm,
So that is also an
mhm,
asset. So you list it there.
mhm.
So that forms your assets and anything else that you own in relation to your business. For someone else, they may have a computer, all those things. Those are your assets.
Mm,
And then you put your liabilities. And your liabilities are really just the money you owe people. So, for instance, this toll in we pay for it, like I said, they probably have a postpaid line with Safaricom that they
mhm,
use. You pay at the
mhm,
end of the month, so you owe
mhm.
Safaricom 3,000. The person you have
Mm,
employed, you also have you buy from a big person somewhere in town who brings several bills, and maybe you worked out an arrangement with them and you pay them at the end of the month. So throughout the month, you keep picking your bills, and then at the end of the month, they will write for you. So for that, we those are liabilities. Those are your creditors, people you owe money because you're selling stock that you haven't paid for. So that forms your creditors. And then
mm,
over there in the assets I forgot to mention, you may have
mhm,
someone who also comes to your store and takes a large amount and tells you also they'll pay you at the end of the month. That forms your debtors. So you have your debtors, your assets, and the assets. Then you have your liabilities, which is your creditors and unpaid bills, which is we call accounts payable. And then you put them. And then what balances is the amount you, as Catherine, invested in that business. When you started that business, you probably said, I will use 100,000. So that 100,000, you will always report it there as your equity because it never went, it was never spent, it was never eaten. It is still what funds the business going on. Okay. So back to the question you had asked me, what's the difference between financial statements and other reports? Financial statements will always concentrate on numbers, and really what they are trying to show is the income you're making. They are also trying to show where your business is at. With a balance sheet, you're able to know, oh, now my creditors are becoming too big. I need to pay some people. Or you're
mm,
seeing, oh, my debtors people now have gone up to 10 days, 12 days, they haven't paid me. I need to follow them up. So they are to help you manage your business. Other reports, like for instance, you can have a marketing report. It will really
mhm.
just show the efforts you're making to advertise your wares to other people.
Yeah.
You can
Yeah.
also have maybe an expense report. You'd like to keep track of the expenses you're doing, so it just shows that. You can have, if you do a business that is highly regulated, you can have, like a restaurant, for instance, they need to have lots of licenses from the county
Yeah.
government, from the Ministry of Health. So you can keep a compliance report just to make sure that you are always, all your certification is correct. So all those other reports are just to keep track of other items, but not necessarily money, unlike
Mm,
financial statements that keep track of your business finances.
mm. Oh, thank you very much. We come into, I think you have alluded to a bit of that, telling us what to sort of look at, assessing a bit of the health of the organization. Probably you can mention what are some red flags or warning signs to watch for in financial statements.
Yes, and some of these are very obvious. For instance, when you do your income statement, and obviously your expenditure is higher than your income, that is a big red flag because then now you're making nothing from your business. You're toiling for 30 days, selling all these things, but at the end of the day, your expenses are higher than what you make. So that is one red flag when you become loss making. Another red flag is when you start to see in the balance sheet, you start to see your debtors are just increasing month on month on month. It means
Mm.
people are not paying you. I remember when we were growing up, there used to be these pictures we used to hang in businesses, and there was one of a very big guy, and it was always written he sold in cash. And then there was a very thin guy, and it would say he sold on credit. So credit will eventually not be too good for your business. So when you start to see that line of your assets is growing too much, then now it's time to employ either someone to help you collect your funds or to put more effort there. Something else, and let me talk about this especially for the cash flow. You've had the statement cash is king. And
Yes.
for sure, cash is king because it's the amount of money today. If I run a business and I'm told we need to do this, then I need the cash to be able to access that. So, also, when you do a cash flow statement and you realize, and maybe we'll get into how you do that, and you realize you're getting into negative cash, that is also a red flag because it means, as of today, if I'm told to do anything for my business, I can't because my business has no money. Other red flags, of course, would be also other than even if your expenditure does not overtake your income, also you shouldn't. You need to keep an eye on it that it doesn't increase such that it reduces your margins too much. You need to be able to
Mm.
maintain a certain margin so that the business can be worth your while. So also that's another line you need to keep track of.
Oh, thank you very much for that. Probably you can also guide us. I think using the example of the second-hand clothes,
Yeah.
how the financial statements can guide the decision making in the day-to-day business operations.
Yes, as I said, you're keeping your records on daily basis, so it
Mhm.
helps you understand where you are. Remember last week when we spoke about a budget, we spoke about
Yes,
you need to track of the things you
yes,
planned for. So now
yes,
this is the actual now. You remember the
mm,
budget we just planned and left it
yes,
there. Now this is the actual spending or the actual revenue as it is coming. So for one,
yes.
financial statements can help you decide if you're within your budget. And then if you're
Mm,
going beyond, then it's time to adjust. They can also help from early on, you can start to see this month I'm headed to loss making because probably you had a big expenditure that you did not expect. Remember those
mhm.
things we spoke of last week about emergencies? Then you keep
Yes,
track, you realize, okay, here I will have a deficit of this much. Then you can make a plan to cover for it. If it is just a temporary situation, these are times now you can decide perhaps this would be a good time to access funding so that it can cover this hole that
mhm.
I have. And then once I put it in the business, it increases my sale and I'm back to profit making. So they help you keep track of what is happening. They help you keep track of knowing now, maybe it is time for me as a business owner to invest a little more into my business. I may have started it with 100,000, but the way
Mhm.
business is looking, it looks like its operations cannot sustain it. And
Yeah.
since I'm at that point where I do not want to go to a lender, maybe
Yeah.
it's time to go back into my pocket
Yeah.
and remove that saving I had put aside for 50,000 and bring it
Mm.
back to my business. So I increase my capital. So it's you're always on top of things of what is happening to the business. And I want to really emphasize this because for most business owners, they
Mhm.
think keeping financial statements or financial records is really for the big corporates and the big businesses. And there are things you only need at the time when you go to a lender. That's when you call an accountant to come and
Mhm.
make them for you. They are not only for that. It's a very good record for yourself. And as I said, it's very simple. Keep yours as simple as I explained it. Then that way, you know where your business is at any given day.
Keep it simple.
Keep it simple. It doesn't have to be complicated. I know we see those financial statements in the newspapers, like
Yeah.
now we're going to start seeing a lot of, like the financial industry will start reporting.
Yes, they
That
are.
one
They are
is done by
reporting.
professionals. And that's okay.
Yeah.
But you, as a business owner,
Yeah.
keep a simple one for yourself.
Okay. Okay. All right. Now we come into looking at the challenges and misconceptions. How can we, as entrepreneurs, small business owners, avoid getting overwhelmed by the numbers and focus on what truly matters? Probably you can also paint a bit of picture where we have some common mistakes on what our small business owners interpret financial statements. Then they jump in and now they're like, oh my god, this thing is not even making sense. Yes, she said they keep it simple, but I am now losing it.
Yes. One of the ways that it will get very overwhelming for you is when you wait at the very end to now keep your
Mhm.
financial records. As I said, most financial years
Mm.
will run for a year. So you've been running your
Yes.
business from January, just winging it. You're like, somehow I bought stock, somehow I sold, you know, you're just
Yeah.
winging it. And then when it comes now at the end of the year, you probably, already have an accountant on your payroll or you get
Mhm.
one. And then they do the financial record for you. And then when you see the numbers, of course, it's gonna scare you because you'll see things like, oh my God, we spent 100,000 on lighting, and you start thinking that is way too much. Then you start to see, oh my God, in the month of June, we only made, 100,000, whereas I had budgeted for 400,000. What happened there? So now you get lost, you get overwhelmed, and you don't know what to do. So, as I said, keep track of everything on daily basis. Then that way, you do not have any surprises. And also, you prepare ahead because also failing to keep this record, one day you will just wake up. You've heard of those businesses. They wake up and you are a second-hand clothes owner and you
Yeah.
only have 10 items to sell. And
Yeah.
really, you can't open a shop for 10 items. I mean, people
No.
need to come and choose out of a variety. And that's what
Yeah.
will happen because you'll have no money in the account and then you'll have no stock and you will not know what to do. So, those are some of the red flags. Let's not leave the financial record keeping to an outsider. And even if we do use one, for those businesses that may have an accountant, then make it a habit to understand what is happening every day. Let them show you the records.
Mm.
Let them show you what happened yesterday. Let them show you what happened last month. Compare with last month and that other month. Let's see where we are. So that way you do not get overwhelmed by your numbers. But then again, something else I will say also, let's concentrate on the numbers that are important to you, that are important to the business. You will see financial statements have very many lines and very
Yes.
many, they have very many numbers and very many different lines that are adding up, and sometimes it may not make much sense to you. There'll be
Yeah.
items there like depreciation. They'll put depreciation and you'll be thinking, but my car is still moving. Sometimes in the financial world, the terms and the way they do some of these things, they may even depreciate it to zero, and yet you're still driving the same car. So don't concern yourself with those, we call them non-cash items. Don't concern yourself with such items, because then again you start to wonder, but my machine, I still need, my this,
Yeah.
how can it be depreciated to zero? So
Yeah.
choose your key numbers and keep track of that.
Mm. Oh, thank you for that answer. We come into looking for money. So we might not cover everything because it's very
Yes,
wide. So we'll just cover
yes.
a bit today.
Mm.
So having been in that financial industry, you can help us understand some loan dynamics.
Okay.
So probably you can mention key factors lenders consider, and then also tell us specific loans suitable for small or growing businesses.
Yes. Thank you very much for this question. This is my area. This is my area of specialty. I love loans. I talk about loans day in, day out. And
Mm.
sometimes, as a business owner, you cannot avoid it forever. So, first and foremost, I will tell small business owners, as you plan to approach lenders for money, you need to have these records. Because then, if you don't have them, you portray a person who has no idea what's going on in their business. And of course, even you would not lend money to someone who doesn't know what they're doing. So, number one, let's keep the records. As I said, even the black book suffices as records for as long as they make sense and you can explain them. So, keep records that are clear to you and you can explain them. Number two, there's one, it's not, it is important depending on the kind of money you're looking for. If you're looking for big amounts, of course, the lenders want something more organized. So at that point, it would be good to involve a professional to keep those records for you. But please remember, these professionals that you're bringing into your business to prepare the financial records for you, they're coming at a time. Financial records, by the way, are always historical, because anything into the future is made by you. It is your budgeting, it is your projections. So even for this accountant who's coming to your business, they will need records because they also can't guess numbers about your business. So even for the sake of them, keep the records so that when they come, you hand them over your records, and then it's very easy for them to paint your business. So now you have your financial records done. For the sake
Yeah.
of this discussion, we shall assume you have the correct one. So you have your income statement, you have your balance sheet, and you have your cash flow statement. So what are the lenders looking for? First and foremost, most lenders, almost all, will lend to a business that is making profit. Nobody wants to lend to a business that is loss making. So that is very important. Before your revenue is higher than your expenditure, perhaps it's not a time to approach a lender yet. And that will happen at the start of a business. And that's why we see for most lenders, we will always ask that you have at least run your business for at least 2 years. And why so?
Mhm.
Because the first 1 year or so for most businesses, you're barely breaking even, because obviously there are big initial costs that eat into the money that you put into the business. You still haven't gotten the hang of things. There's still, expenditures you're doing that you didn't know. You haven't understood the industry. You haven't
Mhm.
gotten to have people extend credit to you. So you're still paying
Mhm.
everything cash. So the first year is trying to balance your business. So most likely you may not be profit making. So as when you turn profit making, then you can go to a lender. So the number one thing is the profit making. That is from the income statement.
Mhm.
Number two, we also lenders want to see what kind of margins, even though you're making profit, what kind of margins are you keeping? You do not want to lend to a business whose margin is only 2%. You know, they make all this revenue, but like 98% of it goes to running the business. Of course, there are specific businesses that is the scenario, but for most businesses, you at least need to maintain a certain margin. And in the business world, there are certain expected margins depending on the industry you're in, with the highest being the trade industry, because really you buy sorry, the highest being in manufacturing, because
Mhm.
manufacturing you use a raw material that is expected to be cheaper, you add some value into it, and you can double the price of that thing. So over there we are expecting margins of about 30%. For trade, you're buying a dress from, you're buying a dress for 100 shillings, the most you can add is 20 shillings. So those margins are expected, and the lenders will check to see you're within your margin. Because then if you're not, it means you're not efficient in your business running. And when you lack efficiency, it means you can run this thing down, because
Oh,
your costs are high, and the costs that are high are probably not necessary. So that is also important. Now we move to the balance sheet. Balance sheet is very important because remember, this is what you own, what you owe people, and what you
mhm.
invested.
Mhm.
So I do not want to lend my money to someone who only invested 10 shillings in their business. Clearly, even them, they don't have faith in their own business. How do I begin to have faith
Mm.
myself? So that is very important. You have to have some equity. As they say, you have to have some skin in the game. It's your business. Show
Yeah.
me you believe in it. So, very
Mm.
important. Also, if you have very low equity, your own contribution, then that means you have funded this business either on debt or, other investors, which then means these people can take over your business. Because if all you have, you buy everything on credit, then you keep extending it to 30 days, 60 days. One day, if you don't pay these people, they'll come for their money. And when people come for their money, they take what's in your business. When they take what's in your
Yeah.
business, then your business dies. So there
Yeah.
needs to be a balance. And this is where we get to the ratios. I don't want to get to that now. It will just too much and scary. But basic,
Same. Next time.
basic The ratios are nothing, it's not Greek or rocket science. They're just those things I'm talking about. We are checking the level of debt in your
Mhm.
business in relation to what you own. So we are seeing, is your debt way much higher than what you own? And which leads to that scenario I've just explained. We are also checking, are you selling everything on credit? Which then means you have very high debtors, which in a balance sheet is an asset. But what is the probability of getting this money? Because, I can sell on credit, and if I collect within 30 days, there's a chance, people will pay me at the end of the month. But if
Yeah.
some of these debtors of mine are going as far as 180 days, 6 months, Surely, the
Yeah.
longer a person owes you money, the lower the chances of paying. So
Correct.
those are also things we are keeping track of, just to ensure that that line is not growing. Also, if you are not paying people, like I said, if your creditors are really growing, then it means those people now own your business and they are just waiting for a day to come and collect everything you got. So that is one of the important things in a balance sheet. And then finally, and the most important statement to a lender is a cash flow statement. Why? Because I started by is what will pay your loan. So the lender is looking to see, do you have any cash that can pay your loan? And now I will explain a bit of how a cash flow statement is prepared. And you may have heard of there are some businesses that are profit making, but they don't have cash. I know it
Mhm.
sounds like an oxymoron because how do you make profit and then you don't have cash?
Yeah.
And it is simple because remember I said we count everything you have sold. We do not differentiate what you sold on credit. We do not differentiate what you will receive payment next month. If we sell it today, we recognize it today. So we will report that number as revenue, even though some of it we may not have received that revenue. Remember, to arrive at a net profit, at a profit, it is my revenue less my expenditure. Expenditure, especially if you're a small business, most of it you've already incurred it because you're not going
Yeah.
to tell Kenya Power to wait. You'll pay them your bill after 90 days.
No.
You're not going to tell your internet provider to wait. You're not going to
No.
tell your landlord to wait. You're not going to
No.
tell your employees to wait. So all your
Mhm.
expenses you've already paid.
Yeah.
Yet you sold your clothes to Eva, who told you, when I get paid, I will pay you. So you have calculated this revenue, but you have
Mhm.
actually not received the cash. So at the end of the income statement, you may have a profit. And the cash flow
Yeah.
statement always starts with the profit. But then now we subject this profit to the changes to show exactly how much cash we have. So the number one thing we always add in a cash flow statement, as I said, we start with our net profit. So we start with
Yes.
our net profit. Then we put what we call changes in, let me not use the big financial terms, we just
Yes.
keep track of the changes in business operations. Let me call them that. So for instance, I will say changes in debtors. So if at the
Mhm.
beginning of the month, my debtors were 10,000,
Yeah.
at the end of that month, my debtors are 30. It means now my debtors increased by 20,000, which means now I have an increased uncollected cash of 20,000. So I don't have that cash. So what do? I minus this from my net profit because I don't have that cash. Okay.
Mm.
If my creditors at the beginning of the month started with 10,000, meaning I owed people out there, different kinds of people, maybe even my suppliers, you know, maybe my licensing, I owed 10,000. And then at the end of the month, I owe zero, which means I paid everybody I owed, which then means whatever cash came into the business, I used it to pay my creditors. So once again, I have reduced my net profit by that 10,000. Now, are you seeing what's happening to our net profit? So over here, we
Mhm.
started at a net profit of 100,000. We have now since reduced it with 20,000 from the debtors. We have reduced it with 10,000 to the creditors. Maybe in that month, I wanted to buy an asset. So I
Mm-hmm.
did a spending, and I'm avoiding to use the financial terms. So I spent some money to buy something that may be even long lasting in my business. Maybe this
Yeah.
was a month I decided I need a laptop because I'm tired of doing this marketing on my phone. Now I need a laptop. So I went and bought a refurbished one. I didn't even buy a new one. So I bought a laptop for 30,000. Guess what? I took cash out of my business, 30,000, and bought that laptop. It is a good thing because you know what it does? It increases my
Mm-hmm.
assets over there in the
Yes.
balance sheet. But
Yes.
in terms of cash, I don't have it. And this laptop will not generate any income.
No.
It may eventually, but as at that month, it did not. So once
Mm-hmm.
again, I've reduced my cash by 30,000. Now we have reduced so far by 60,000. So the net profit I was bragging about over there was just a number because in actual sense, the cash I have at hand now is 40,000. And if we keep going with this example, that net profit can easily become zero because that could be the
Mm-hmm.
month I also took a debt. I took a loan. So now I have to pay that loan. And the monthly payment of that loan can be 30,000. Where will the payment come from? From that same cash. Or I have an existing loan, that's what I mean. So then at the end of the day, the profit of 100,000, I don't actually have cash. So when a lender looks at your cash flow statement and sees it comes down to 0 or to 10 shillings, and the loan they want to give you, the monthly payment is 50, they will tell you you don't have ability to pay. And you will not understand why, because my business made a profit of 100,000. What do you mean? I mean, really, I can pay you 50 and keep the other 50, but you may not have the 50 as you thought.
Yeah.
So I always tell business owners
Mm-hmm.
the most important document is your cash flow statement. Why? Because cash pays loans, not profits, not assets, not equity, cash. Can you hear me, Kathy? Kathy, if you're speaking, I can't hear you.
I almost can't hear you, Eva.
Can you hear me now?
Can you hear me?
Yes, I can hear you very well. Can you hear me?
Can you hear me, Eva?
Yes, I can hear you, Kathy. Oh my. Seem to have Seems to have dropped off.
Sorry, but we got cut off.
Yes, we
Can you hear me
did.
now?
Yes, I can hear you.
Oh, sorry. Okay, sorry about
Yes,
that. You need to
that
repeat the last statement where you are talking about the cash flow statement, and then we can move on to our next question.
yes.
Yeah, you might have to repeat that part. It all got lost.
Oh, okay. Yes. So what I was explaining, I was just
Mm-hmm.
explaining the changes in cash spending because
Yeah.
then uh, that's what now describes the amount of money you actually have in hand. And I said that remains the most important statement to a lender because,
Mm-hmm.
as I said, cash is what pays loans. It is not profits, not assets,
Mm-hmm.
it is not what you contributed into the business, it is the cash you have at hand. So even though
Yes.
you have a profit of 100,000, that does not mean that's the cash you have. So a cash flow statement is a very important statement, and every business owner should keep it. And as I said, I avoided to use the big financial terms. And I said, you're
Yes.
just looking at the changes that have happened to your cash, what you removed from your bank account to go and buy something or to pay something
Mm-hmm.
versus what came into it.
Okay. Thank you. So we've talked about relationship management. What are the critical factors in building and maintaining strong relationship with lenders? And probably you can share what you faced, especially expectations when the business owner was coming in to the lender to meet with the lender, and what the lender was anticipating also from the relationship.
Okay. Yes, this is very important, and especially to the small businesses, because I feel most small businesses, when they approach a lender, and in this case, let's talk of a bank, they
Mhm.
always feel small and inferior. And you feel, this lender, this bank, it's the one to dictate all the terms. Well, it may, for the fact that it is their money, but
Mhm.
also they have that money to lend it to you. So if you don't go, they will also do nothing with their money. So let's
Ah,
first understand the balance of power. It is a symbiotic relationship. So no one person should feel bigger than the other or smaller than the other. To make your relationship better, I will advise most business owners. As I said, as your business grows, it will reach to a point you will need credit because there are some growth milestones. We may not make them from the profits we've made or from our own investment. So start thinking of a lending 3 years from now. So you start preparing for it today. So start having that relationship with your banker today. Open an account in a certain bank and start putting your money there. That that way you establish a relationship. This person, they start to understand you. They start to understand the kind of business you're running. When you have a bank account, especially if you're a business owner, please stop in the bank. Don't just do mobile banking and online banking. Go to the
mm,
bank and get to know who is the person who
mm.
manages your account for you. They call them relationship managers or relationship officers. Get to know them. Say hi. I know this sounds like very simple things to do, but they're very
Yeah.
important. Get to know them.
Mm.
When you make a stop in that bank, ask for them and say hi. Then they know you and that relationship exists. Most importantly, they start
Mhm.
to understand your business. They start to
Mm.
know Kathy's business between January and March, she makes a lot of money. Come April, May, and June, not so good. But then again, she will make up for it September to the end of the year. So when you do come to borrow, they already know you have that fluctuation. So that's the number one. Get to know these people, be friendly, say hi, and they will also reciprocate. because they know you're a future customer. So they will be more than happy to entertain you. So start that relationship at that point. When it comes to now the actual lending, come prepared. Show the lender you understand your business. I used to do this when I worked in the bank, and I would meet a business owner, and some of them would have presented all these great financial records, and you just ask for a meeting with the business owner, and you sit with them, and I'll just ask, take me through your business. And for most business owners, you will have to stop them to stop talking about their business, because most people are passionate about what they do. So be
Yeah.
passionate about your business. Understand your business. Because when I see that passion, then I know when I give you my money, you know exactly where every shilling is going, and you know what you're going to do with it. So understand your business, and most importantly, be able to explain it to a lender. Very important. And then get to preparing your records so that they are so clear. Before you even put in your loan application, talk to these people and to your bank and your relationship person, and get to understand what are the steps, what
Mm.
are the requirements, what do you people look for, where are your interest rates at, how long can you give me a loan. Get to understand all these things so that when you come, you have a complete package. Not today you put in your application, tomorrow they call you, oh, you did not bring a cash flow statement, oh, you need to bring a business profile. By the third day, I have given up on you. And I am just like, this person doesn't know what they're doing. So present yourself as someone who understands and who is worth the money they are being given. I mean, you'd never
Mm.
lend 100,000 to a homeless person. So in the same breath, you'd never lend money to a business that doesn't look like it knows where it's going. I want to also touch on, once you do get the loan, don't stop saying hi. keep keep the relationship as well, because you know what, things happen. There can be an economic downtown. Your business can something can happen to it. You will still need the same person. And I want to reiterate this point to business owners. When you start to see things are not looking good, and today is March, today is in the middle of March, and I start to see if things continue the way they're going, end of April, I may not be able to meet my loan repayment. Please visit your lender at that point and preempt what may happen, and ask for how they can assist you. It's a relationship. We all benefit. The bank benefits when they collect their money back, and I benefit when my business does not get invaded by lenders. So visit them, don't run. Most businesses, when you sense danger, you're like, that relationship, I'm never picking their phone call again. No, take yourself there, say what's happening. Maybe you have just seen, maybe something has come, maybe there's tribal clashes in your area that may affect your business. Of course, they're not going to last forever. You can ask to be given a break to pay your loan for the next 2 months until things stabilize. Then you make up for it. And let me start by saying lenders have very many options. So please don't shy away. Don't wait until now they are looking for you. Go there before they look for you. And that is very important to keep that relationship. Quickly, I can just mention the loans that are most small businesses. I would advise, don't go for big amounts. Remember what I said uh, last week. When you have money in account, it calls you to spend it. Don't do that. Understand your need at that specific point in time and borrow just the amount you need. And if you're really just borrowing to pay your suppliers, and then once you get those goods from your suppliers, then you're going to pay, then you can take short-term loans. There are all those things called supplier finance. You've heard of supplier finance. You simply go and tell your lender, I need to buy 30 bales of mtumba clothes, and my supplier gives me 30 days for me to pay. And I know when I get those 30 bales, it will take me 2 months to sell it. So please give me supplier chain finance so that I can pay my supplier, and then you give me 2 months and I'll pay you back. Take those kind of loans for starters. Stop agreeing to be tied to monthly payments, especially if your business is seasonal. So there are all those. You can do invoice discounting. There are those you supply goods and then they tell you they'll pay you after 30 days. Go to your banker, you tell them, see, I have this invoice, and this person will pay me in 60 days. Could you please give me the money so that I can continue with the business? They will give you the money and then you'll pay. That way, you reduce your interest cost, and also you reduce too much cash in your hands that can easily be diverted.
All right. Thank you. Thank you very much. Thank you, Eva, for that insightful conversation. And thank you all for your presence. And that brings us to the end of this week's Founders Conversation, powered by the SME Founders Association, where we connect entrepreneurs and professionals to money, markets, and mentors. Joining is easy. Simply visit our website and become a partner for just 5,000 shillings, which helps unlock access to valuable learning and networking opportunities. I've been your host, Catherine Kariuki. Until next Thursday, for more insights and strategies on managing your finances, looking forward to seeing all of you again. Have a good day. Thank you.